All right, friend of the show, Chase Taylor, founder of Pinecone Macro Research, joins us again. Chase, great to see you, buddy.
Yeah, long time no see.
It has been. It's just that, you know what, it was such a highly regarded episode that we had to get you back right away. And I'm not just saying that. Actually, I got tons of compliments about how much people enjoyed that. So I do thank you for your time. And let's talk a bit about 2025. What surprised you over the past year in terms of how markets have behaved that you weren't really expecting?
Yeah. So the funny thing is, I expected the rest of the world to outperform the US, but there's like some stuff under the hood there that still like really caught me by surprise. I mean, like the S&P is not even up 20%, and we had Peru, Colombia, South Africa. You can do a whole Africa ETF. All that stuff's up over 60%.
Wow.
I mean, right. I mean, South Korea is up like 90%. There's a bunch of stuff. If you just look at what all is above 50%, it's like a third of the country ETFs out there. And then people think the US is on fire and it's up like 17 or whatever. So there are countries that did not surprise me, but then who was shilling, South African, equities coming into the year? But if you did, 3x'd the S&P. So that surprised me. Some of those individual countries.
I didn't realize that the African countries were up that much. That is a shock. Is that something that you think can continue?
Yes, I think a lot of it can. I mean, I think the rest of the world is gonna outperform the U.S. for the foreseeable future. It's just the trick of trying to figure out where. And I think when you look at Africa, especially South Africa, like platinum group metals, gold, all this stuff has had quite the year. So that obviously was a significant boost. But at the same time, our mutual buddy Rupert, he has like the e-commerce business in Africa. Like that thing's been great. Like the whole continent's done well. And to not spiral too far off into like macro land, but one like interesting thing here is as the US kind of stiff arms some Chinese imports, they're kind of getting flooded into places like Africa, which sounds bad. In some ways it is, but to get good, very, very cheap products, it probably isn't, at least short term, a bad thing for the continent.
What else surprised you in 2025? Anything else?
That's the biggest one. But I mean, like another example of something I liked, but like, wow, was silver. Like the amount of silver that goes to solar, like solar's worth 20% of the demand for silver now. And that made me really bullish coming into the year, because I was like, man, if you get any investment demand in silver on top of this really strong industrial demand, and we know you're in a deficit, like, man, that could be a pretty violent move higher. But if you told me it's going to be 110% move, just in 2025, I would have been happy to make a bet on that and lose it. So
not only that, it feels like it happened all in the last month.
It really does. I mean, the chart is very much straight up.
Do you think it can continue?
So that one's tough. On a fundamental basis, I think yes. But anytime I see a chart that has peaked above the clouds, it bothers me from, at least short term. It's, to me, both gold and silver probably have to do some digestion with RSIs like up in the 80s or whatever. Like, but solar's not going anywhere, and that's just going to like keep eating into the demand side that much more. That is very structurally bullish, and it's not like people are tripping over themselves to get more out of the ground at the moment, at least. So yeah, it probably can keep going.
I like that, peaked above the clouds. All right, so those were the things that surprised you in 2025. Looking forward, 2026, what do you think the market will be surprised by the most?
Yeah, so the market should be surprised by this year, but I don't think the market has even paid attention. But this is something where, to answer the can it keep going question, is a big time yes for me, and that is particularly solar, which I just talked about with silver. Like solar's up like 80% this year, the solar ETF, and I think that will continue. And you can even look at like the iClean ETF. Like we talked about this, recently, but these battery metals and sort of the electric stack metals, the stuff that makes up sort of the goods of the 21st century, as it looks like now, at least robots, drones, electric vehicles, you name it. I think those metals are mispriced. And I think if you look at something like solar, it's mispriced because everyone thinks, oh, well, the US is anti-solar because of the election we had. But then you look at the last quarter, and there was significant new solar put onto the grid in the U.S. I think that's going to continue. As electricity prices keep climbing, I think to borrow from our buddy Marco Popic, like the constraint-based framework, even President Trump would realize like his constraint on electricity is more important than his preference to have, fossil fuel energy. And I think the U.S. could even pivot within the next 3 years to get more serious on something like solar. So you have solar up 80% with policy headwinds. Like, what would it do if it had policy tailwinds? Is kind of the point here.
Got it. All right. And in terms of electricity, you mentioned that. Do you think that that's going to get a lot worse? Like, do you think that this is going to be something that politicians start debating and that ends up being on the front page of papers, like how much electricity is costing?
Yes, I do. So I think unless you get some weird, price controls or, building a fence around AI and be like, you guys figure it out for yourself, but you're not going to pull from, the local neighborhoods anymore, that kind of stuff. I think the answer is yes. And it looks to me like policymakers are all in on AI. Obviously, all these, policy papers and executive orders are turning it into a total like existential thing that we have to win the AI war. So my assumption there is they're going to get all the power they want. And if that makes power more expensive for your grandma, like then she's going to have to deal with it kind of thing. So yes, I think it becomes a major political issue. And as it does that, people are going to look around and be like, what else could we do? And then, some sheepish guy in the back of the room is going to like raise his hand and be like, how about we actually get behind solar? And I think eventually someone's going to be like, all right, let's do it. You know what I mean? And not just solar, like there are great opportunities and stuff like geothermal that not enough people talk about. But as I've explained,
it's a true contrarian play in this environment.
To me, it shouldn't be. It's up 80% this year, and I feel like nobody cares. But it is still in a contrarian thing. It does have real policy headwinds. I just think that they're going to go away.
To me, it is always amazing that like in terms of us, when we started talking about EVs. And, the government started telling all these automakers that we had to build all these EVs. It had to be a certain percentage of the fleet. I was like, are we not like stopping and thinking about like how we're going to power these EVs? Because I know like here in Ontario, Canada, we had points where they were telling us to turn off our air conditioning in the summer. And I'm like, okay, so you're telling us to turn off the air conditioning because there's not enough electricity. And then you're going and encouraging everyone to buy an EV. It makes no sense. And contrast that to China, that went about it completely the other way and built the infrastructure first so that they could then put the EVs on it. It kind of feels a little batshit crazy to me.
Speaking of China, the capacity China added to its grid last year is equivalent to 1/3 of the U.S. grid. Like just bonkers how much electricity they're putting on their grid. And to your point, I lived in SoCal a few years ago, and this is when electricity was still a bigger problem there. They've done a reasonable job of making it a little better since I left, but at one point they've sent out one of those notices, like the whole turn off your AC thing, but it explicitly said in that unplug your EV. And I'm like, well, that's funny, from California, who basically told me I better get an EV and then said, please unplug it. Like, okay, no one thought this stuff through.
There we go. All right. So Chase, thank you very much for joining us. The founder of Pinecone Macro Research. Why don't you tell people where they can find out more about you, your letters, your stuff that you do with Zach, your podcast, plug the whole spiel.
Yeah. So more about me and my firm, pineconemacro.com. And then I'm the head of research at Bulwark Capital. We're an RIA based out near Seattle. And you can find out everything you want to about that at bulwarkcapitalmanagement.com. And that management part's MGMT and bulwarkcapitalmanagement.com.
Thanks again, Chase.
You bet.
Okay, folks, it's that time. Friend of the show and my good buddy, Rupert Mitchell, author of Blind Squirrel Macro, joins us. Rupert, thanks for making time for us.
Hey, Kev. Good evening.
All right, let's get right to it. 2025 was quite a year. What surprised you the most?
This one was really easy. I did not expect African equities to outperform the S&P by 50%.
Listen, are you like, one second, I'm having trouble. Are you patting yourself on the back there? Like you're reaching over?
Because obviously it was only a 1% position.
Right? It's always the way it is. It was a great call.
I got to show you a couple of slides. Look at this.
Sure.
Where is it here? It's going to flash up in a second, isn't it?
Yeah, here we go.
Okay, so actually this is the one. So look, this is AFK, the African ETF, right, in brown, versus the emerging markets, MSCI emerging markets, EEM, and the MSCI EFA, which is IEFA, and the SPY. I mean, I was calling for international outperformance this year, but Africa really completely took my socks off.
So what happened? Why is that? Like, why the huge run?
Well, there's a big weight in South Africa, and so the big rally in platinum group metals is helpful. But at the end of the day, it's not as though these markets have got cheap again. Can you see the purple and blue ones here now?
Yeah.
So this is just the S&P forward PE at 23.4 times next 12 months versus its 19.5 10-year average. Africa's not even at its mean yet after a 70% run. So my surprise for next year is that it's going to do the same. Now this will make you laugh. This will make you laugh. One of the reasons that confirm this. So our mutual buddy Chase Taylor tweeted John Arnold yesterday, and this is, can you see it there? Can you get a sense of how little electricity people use in sub-Saharan Africa? Imagine each person turning on a 50-watt light bulb. That alone would instantly double consumption. Right?
Seriously?
Just wow. And then literally the next thing in my timeline was this terrible maps. I love those guys. And a picture of Africa with the word Asia underneath. It's absolutely brilliant, right? You cannot make that up. Nobody is talking about this frontier EM type trade. I've been pitching. It's not ready to pitch yet, but I did a really interesting interview the other day on Uzbekistan, and they are listing a privatization fund managed by Templeton on the London Stock Exchange in Q1 next year. I think that's going to be a really interesting trade to watch.
Wow, you've turned into quite the true emerging market specialist.
I've always been an EM guy, really.
Have you?
Yeah, no, I joined Barings in '94 because it was an EM investment bank, right?
Wait, this is Barings, England's oldest.
The one that went bust 6 months later. Yeah, that one.
But like, it's the oldest English bank in history, and it's in the EM bank.
Yeah, no, it financed the first original emerging market. It financed the Louisiana Purchase for the Americans.
I did not know that.
There you go.
That's true. Like,
yeah, totally legit. I'll send you the snippet from the history books. Yeah, can't remember which one it was. Henry or Oliver Baring. I can't remember. Alexander Baring. Yeah, he financed the Louisiana Purchase. $11 million. $11 million.
That was probably a lot back then.
Yeah, but you know that the Louisiana Purchase is not just what is modern day Louisiana. It is literally that entire panhandle that goes all the way up to your southern border.
Yeah, no, I know it was.
It's vast.
Yeah. All right, I'm not going
to. Anyway, my surprise for next year is that EM's going to do the same, right?
Okay. I'm not going to let you off that easy though. What else in 2025 surprised you?
I the violence of the international rotation in the first half of the year, right? I am surprised that US risk assets bounced so aggressively out of Liberation Week. It certainly caught me flat. Fortunately, it all happened so violently I didn't sell anything at the lows. But I'd have loved to have taken in my credit hedge that week.
Yeah.
But no, of course, I thought that high yield spreads were going to be blowing out to 700. Yeah. That didn't happen. I'm just amazed, and I know this is a favorite one of yours. I'm just amazed that there hasn't been a more serious implosion of the dispersion trade this year.
Yeah.
Yeah. I was looking at, I'm actually capitulating on my SPY straddle strategy this week because I'm just going to come back to it next year. It's just been a disaster since May.
Well, don't you think there's a certain amount of that's got to be seasonal with these auto callables and this?
Sure.
Yeah,
they're all particularly the retail back product is all written on these annual cycles, I'm sure.
Yeah, and because that's what I'm thinking, that there's actually something going on. And I've seen a couple of things recently that have just kind of blown my mind about the size of this market and what's going on there. And you realize that they're selling volatility to these dealers in single stock names. And it
Yeah.
really makes you understand why this dispersion trade is what it is, because the dealers are getting long all this single stock names volatility from these auto callables, and then on the other side you got like JP Morgan option whales, things, people like that buying index protection, and it's just a great trade while it continues to work. But here's a question I have for you in terms of that trade, because I remember learning from Chem Carson and for the first time understanding how the position creates the volatility, meaning that once he explained to me that, what, if everyone is long the strike, if all the dealers are long the strike, then that actually causes a delta hedging strategy that reduces volatility. So ironically, if a big client sells the dealers a whole bunch of options around that strike, it can cause the volatility around that strike to be muted. At the same time, if there's a situation where the dealers are all short, it can cause the volatility to be expanded and to be more violent. And so a little part of me wonders, and I haven't figured this out yet, but is the same thing happening with dispersion? Like, are we having the most uncorrelated market in history because of those positions?
I mean, it has to be an input factor,
doesn't it? Like, that's what I got. Like,
this is just all energy. That's risk is only ever transferred.
Yes.
Right. So that potential energy has got to go somewhere else in the market. Of course, that happens. That's why we get these 10% moves on earnings, right?
Yeah.
It's got to find a release valve somehow.
I though think that when this comes unglued, it's going to be bigger than people expect, and I'm with you, and I don't know how to time it. And every time
I only know one thing for certain, Kev. I won't have my straddle position on when it happens.
Me neither. I'll probably be long by then, finally convinced that the stock market's headed higher. Okay, 2026. You told us EM's going to outperform. I want to hold you to more than that, buddy. You got to give me another one. What else is this market surprised about?
I think that the energy stocks are telling us that energy prices could be higher next year.
Oh, you think the stocks are giving you that signal, like that, like you're that excited?
Listen, I believe that I increasingly believe that there are always signs of some other market moving, right? And if energy stocks are moving without the commodity, I think they're trying to tell us something.
Yeah, I hear you. And one more, give me one more.
I will almost certainly lose money in natural gas in February and March.
Okay. Rupert Mitchell, author of the Blind Squirrel Macro. Where can they find you? You got a podcast now. You got a million things going on. Give us the whole spiel.
Well, easy, one-stop shop, blindsquirrelmacro.com, and my new show, which you have kindly just been on, Benny and the Squirrel, as 7 p.m. Eastern live on Sundays and Thursdays.
Oh, and you do it twice?
Thursday, yeah, we do it twice a week. The Thursday's a guest show, and then Sunday night's just me and Benny shooting the breeze.
That's awesome. Well, it's a real pleasure being on, and it's a real pleasure having you on, Rupert. Thank you very much, sir.
Thanks, Kev.
All right, it's our great pleasure. Welcome back to the show. Marvin Barth from Thematic Markets, and one of the greatest names on Substack. Seriously, Marvin. Just a terrific thing, and it's stuck in my mind, Marvin. I still laugh about that name. Thanks for joining us this morning.
Well, thank you, and thank you for the plug, and I'm glad I make people laugh.
All right. Well, one of the things that might have made a lot of people laugh is what's happened in 2025. There's been a lot of twists and turns in the markets. What surprised you the most?
So, I think the thing that surprised me the most is, frankly, the market's reaction to Liberation Day. I think we might have talked about this before, but I've gotten, I guess, some of the policies very right well ahead of other people, and then been completely wrong on what happened with markets. So I had that experience with Donald Trump before in 2016. I predicted he was going to win, and I thought that people would see what I saw for Liberation Day, and you get that reaction then. Instead, everybody said, "Hey, it's a Republican. He's going to cut taxes and, assets to the moon." This time, I was like, "Surely you all know who this guy is by now. There's no." Like, obviously, you've had 8 years of him. And of course he's going to hike tariffs to the moon. He's been telling you this.
Yeah.
And people had this completely opposite reaction to that. And that was one of the big surprises to me. I guess it shouldn't have been, but that shocked me.
I found the same thing. I was kind of confused about, when they were surprised by the tariffs. I'm like, he's been telling you this forever. All you had to do was listen to what he was saying.
He called himself Tariff Man.
He gave an interview to Bloomberg Business Week where he talked about it. He talked about the beauty of it. Now, having said that, in that same article, he talked about the manipulators of the currency and how they're stealing things by keeping the value of their currency too low. And one of the things that surprised me the most is that he hasn't gone after the currencies, that it's been purely tariffs. Yeah. Have you been surprised that the dollar isn't more of an issue for him?
A little bit, but I think a lot of it comes down to probably Scott Bessent. I do think that Bessent seems to have more capacity to tell the president things he doesn't want to hear than anyone else. And has made it clear to him that hey, you're not going to control this thing. This doesn't work this way. There's $6 trillion trades in this market every day. It's just not going to work. So let's try and work on these other things over here that we can get done. And so I suspect that's a large part of the issue. But then, hey, how about the other surprise? It was a little bit less surprising to me given the rest of the Liberation Day reaction. But remember, everybody's assumption was that tariffs meant the dollar had to get stronger to provide an offsetting real relative price. And that didn't happen. So, I think everybody had a bit of a surprise in there, not just the Trump administration, but markets as well.
Oh, for sure. And I joked when he was elected, I said, he's going to make macro great again, Trump. And he's definitely done that.
Exactly.
It's been a terrific market for traders, and especially for, macro guys. Like, for the longest time, this stuff was boring. And if you think about kind of post-COVID here, we've had a huge interest rate cycle. We now had Trump with all these, changings of the guard in terms of the underlying fundamental systems. Like, we haven't had tariffs since what? Going this way since 100 or 80 years.
Well, certainly not on this scale, right? I mean,
right. Well, we haven't. Yes, that's right.
People do forget that, Reagan actually had pretty extensive tariffs. He had voluntary export restraints. It wasn't on this scale. This is another. We haven't had anything like this, to exactly your point, since effectively Smoot-Hawley was the last sort of round of those things, and that was, by the way, relatively small compared to what came before it. But yes, this is something pretty new. I do think that it's interesting. You say make macro great again. One of the problems is that, of course, everybody forgot how to do macro. So a lot of people who claim that they're macro were like, that there's this specific rule books. Central banks do this, and we do, and currencies are supposed to do this, and they really stop thinking about actual macro fundamentals and what drives all those processes that they have found correlations for. And so they were correlation traders, not macro traders. And I think that's been a big part of the problem.
That is a great point. All right, let's look forward now, put on our thinking hats and think about 2026. What do you think the markets will be most surprised about in the coming year?
So I think when we were on earlier, I talked about this, sort of low conviction view I've had that Donald Trump had specific reasons to talk down the Fed and talk down interest rates in this last year. But that he would never be held by those things, and that when push came to shove, he would ultimately appoint a hawk. Um, if anything, I think I've actually increased. So I've both gained and lost confidence in that view. I've definitely gained confidence in the view they are going to go with someone who's going to root to branch reform the entire Fed,
Okay.
completely slim down its balance sheet, which nobody seems to be thinking about. That, like, this is actually the bigger thing they're going to do. They're going to take its balance sheet way down, and that's going to require incredible regulatory reform at the same time. In terms of the interest rate policy, I think that whomever they do will ultimately end up doing the right thing, which in my view means interest rates are going to have to be a lot higher. But I do worry, this is where I have lost confidence a bit. I do worry that all the people that they're considering do think that balance sheet shrinking is going to have such a negative effect that they're going to have lower front end, Fed funds rate to accomplish that. I think that's totally wrong, and I think they'll find that out as inflation goes up. But I do think there is a worry about that. But I think the broader picture is people are going to be surprised that this administration is actually going to choose someone who's going to be very hawkish.
Do you think the market's got it wrong with Kevin Hassett being the leading contender right now?
Well, I'm glad they've moved that way. I've been saying that all along. I said it was either going to be Bessent or Warsh. When markets were at their peak with Hassett, I was saying, nope, it's going to be Bessent, or excuse me, it's going to be Warsh. Bessent has dropped out for me. I would have thought that he was going to choose himself.
Yeah,
and
the Dick Cheney move.
Yeah, exactly. I think we talked about it last time.
Yeah.
The reason why I've sort of pulled back on that one is I learned from a variety of different sources that Scott Bessent is really deeply involved in national security policies. Perhaps maybe more so than Pete Hegseth. And that means he ain't going anywhere. One, because the president ain't going to let him. And two, because he sees other things he's doing that are much bigger than anything at the Fed, which is where normally you'd think a macro guy would want to go. So I think it's going to be Warsh.
Oh, you think it's Warsh? So you think Hassett's wrong? Like the market's overestimating?
No, absolutely. I think it's definitely going to be Warsh.
And that would be.
I'm 99% sure it's not going to be Hassett.
Really? Why do you feel so strongly about Hassett?
Yeah. No. I mean, look. Whatever you want to say about Donald Trump, you can say that he's got crazy ideas or whatever, but he has certain personality types he likes, right? And he also is all about businessman of action, go do things, right? Scott Hassett. No complaint against him, but what has he ever accomplished? Like,
you mean Kevin
Hassett before? He's never done anything, right? And if you are really intent on completely reforming the Fed, you're going to appoint a leader, somebody who actually has a track record of getting things done. Now, I'm personally not convinced that's Kevin Warsh, but he has that persona, and the president seems to look at him that way.
Okay.
I don't think he looks at Kevin Hassett that way. Obviously, the ideal person would actually be Bessent. This guy is like all over the place.
Right.
he's unstoppable. But again, for the reasons I said before, I don't think that's going to be the case.
What do you think is the initial reaction if Kevin Warsh was appointed? Like, let's just say, come January 1st, he says, Kevin Warsh is the guy, I'm putting him in. There's a fair amount of enthusiasm for Hassett and the assumption that we're going to get lower rates. Warsh might be considered more of a traditionalist, and would the market sell off, you think, initially?
I think that the back end sells off on this. Now, ironically, it should be the opposite.
Right. Well, yeah.
the people are so Warsh has, moderated his interest rate stance a bit. That seems more, and this is why I said I have this kind of concern that these guys actually think that because they're slimming down the balance sheet and selling off all these treasuries, they can still cut rates, and they're
Right.
going to be surprised that that doesn't work. But so I think because of that, markets are going to not think immediately, oh, well, we're actually going to get higher rates next year, right? They're still going to be questioning that. But they are going to know that Kevin Hassett has been saying since he left the Fed, way back when. Do you remember that Wall Street Journal, his like mic drop moment as he leaves the Fed? Hey, and my colleagues suck. It was just like, the guy has been on this train longer than anyone else. Your first thought is, he's going to sell treasuries. I better start selling now.
Right. Got it. All right, Marvin, for those who want to learn more about you and what these outside the box takes that you have, where do they go?
So my primary research vehicle is thematic markets. I publish it through Substack, but you can also find it on my website, thematicmarkets.com. But thematicmarkets.substack.com is the main thing. That's my paid research. But if you just want to get a flavor of it, I also have a free Substack that I sort of post all my, shall we say, unresearched, unconventional ideas, and hence the title that you love. Seriously, Marvin? Seriouslymarvin.substack.com.
Thank you very much.
Thank you.
All right. It's my great pleasure to welcome to the show Le Shrub, author of Shrubstack, one of my favorite people, one of the most popular Substacks out there. Le Shrub, thanks for joining us.
Thank you so much for having me, Kevin. It's always a pleasure being on The Huddle.
So you have just nailed a lot of the themes that we saw in 2025 in terms of how the market's behaving, the golden age of grift. I think that's going to be imprinted on all of our psyches for the rest of our lives. Yet there must have been elements of 2025 that surprised you. What were they?
Yeah. So I think Liberation Day surprised me in the sense that I didn't expect them to come out so hard. And then the subsequent taco that, they let Main Street win for about 6 days. That was like even more surprising. It's like you went through all this hassle. You just pissed off everyone, all your allies. And all you gave Main Street was 6 days, like literally. I mean, South Park sometimes just, speaks the truth, as does parody in general. That's why I remain a parody publication, because, I mean, it was such a joke that I couldn't come up with it.
The truth is stranger than fiction. Do you think that there's just zero plan and they're just throwing stuff against the wall? Like, because you've highlighted the fact that this was all for naught. Why bother doing all this? Like, when you're sitting there analyzing, what are your thoughts?
I actually think that, how the Chinese have like 100-year plans?
Yeah.
I think we're like the complete opposite in the West, and we're just doing like with 100-minute TikTok videos. so I actually think there was no plan, and they're just trying to see what sticks. And they see the market reaction, they see the bond market reaction. And, this is the sad part about what we go through versus something that requires serious consideration. Although I will give them the benefit, because I want to just give them the benefit that what they're doing on the critical minerals, for example, is very serious, very thoughtful. Like, there is a really clear plan, and that's like really impressive for the world to emulate. But then on the Liberation Day, I think it was kind of just like, let's just throw it there and see what sticks. kind of thing.
Do you think that on the critical minerals that there's someone else driving the boat that he like listening to? Is that Scott Bessent? Is that Rubio? Like who?
I have a feeling like Bessent is like on top of it, and I think it was like a perfect coordination with the Department of War, because they telling them this is what we need, and then the industry tells them this is what we need. So this was like a very good coordinated action that is going to make a big difference for the next decade, by the way, and for manufacturing and industrialization.
All right. So what other parts of the market in 2025 surprised you? Like, was the fact that the bond market was so well behaved? How do you feel about that? US dollar, anything like what else you look past what else kind of, you stood up and say, I wouldn't have thought that would have happened.
It's kind of weird because I got bearish the dollar early on. So I got bearish the dollar from the moment that Trump met with Zelensky. And I created this fictional character called Klaus, which was like the European fund manager that's going to basically just, get the hell out of US assets. So I was bearish the dollar. We entered the year really bullish Brazil, bullish platinum, bearish dollar. Brazil is up 50%, platinum's up 80, whatever. Miners are doing well, commodities are doing very well. But I got to tell you, the one surprising thing was I was expecting an exodus from the dollar and US assets. And all we've seen is actually an exodus from US dollar, but we didn't really see an exodus from US assets.
Right.
So again, going back to our fictional character, this Klaus, which Klaus is like a tanker ship, just sitting on 100 billion of AUM, and he's wondering, where do I allocate? I think the only thing, so I think what Klaus did, he sees Zelensky getting attacked by Trump in the February meeting, and he's like, "Oh, geez, I gotta get out of the U.S. I'm gonna hedge my currency first, so I'm gonna sell my dollars, hedge my euro at 103 where it was. Now it's 117. But then when he sat down and he was like, "Okay, I need to allocate $100 billion out of the U.S." He was like, "Oh shit, where do I put that money?" Like literally, he couldn't find anywhere to put the money. So I think that's why we haven't seen the exodus out of the US. It's just as simple as that. Like people just had no other choice. And that's why they keep allocating into nonsense like private credit and building data centers in the middle of nowhere.
Right.
So that was my biggest surprise.
All right. So 2026, what do you think the markets will be surprised by in the coming year?
I think the biggest surprise. So, the last couple of weeks, we shifted our portfolio to what I call boomerification. So boomerification is a process where you switch from like growth, Ponzi's and all that stuff, which worked really well, to boomer stocks, but which I define as like just cheap stocks, including commodities and emerging markets and everything. So I think what the market is going to be surprised most in 26 is that the AI trade is done. Which means NASDAQ is done. At best case, it can eke out like a very small return. Or actually, it can even just crash out, because if you're going to have like Google fighting against NVIDIA for dominance or something, or ChatGPT 5.2 versus, Gemini 3 or whatever, once people figure out it's a zero-sum game in a respect, this thing can crash, or it can just stay flat where it is. But I think the biggest surprise will be you're going to have some subsectors that are going to fly. And that AI trade is going to stay flat to down. So that great rotation where, you and I joke about this NVIDIA must die thing. Yeah. I think people underestimate like some really simple facts. Like NVIDIA trades $50 billion a day. The Russell trades like 6. So you basically, and let's not even get about Europe, by the way. So like Europe, literally, it trades so poorly. Like there is literally no capital invested in Europe right now. So things trade so badly outside of the Mag 7. Like you sit down at a round table with big funds, all they're going to talk about is NVIDIA, Google. They're not going to talk about anything else. So what's the most consensus trade amongst those guys? K-shaped economy. So the K-shaped economy is like getting everyone to invest on the top part of the K, which is like, the Mag 7, and then they just forget about the bottom K, the bottom part of the K. And I think the greatest trade of 26 will be the Uno reverse card of that K. And there's so many beaten up names. Yeah. That is going to be a great year. I'm like super bullish. And by the way, and just to finish up on how asleep people are, like I said, Brazil is up 50 on the year. Platinum is up a lot. Emerging markets are up a lot. Like the IBEX is up like 60 in a dollar basis or something, like crazy numbers. No one talks about these things. All they talk about is NASDAQ is up 20. It's like, yeah, great guys. But, we kind of outperformed, being like I don't have a single AI stock, and I've outperformed the Nasdaq like by multiples, and then like, but no one talks about these things. Like even a boomer portfolio in Europe would have outperformed the Nasdaq. No one talks about it.
Yeah.
And I think 26 is going to be the same thing. People are going to come in, you know, long max 7, and then by the end of it, they're going to be like, ah, crap, I'm underperforming just about every boomer out there.
Well, and you know what, you call them the boomer portfolio. I'm not sure the boomers own those stocks anymore. I kind of feel like that they've been sucked in. So it's kind of like the just few remaining value boomers. One of the things that I'm completely in your camp, and I think that people underestimate, is how small those other markets are. And you touched upon that. If we even get a little bit of rotation, like if the guys that are sitting there with their big Mag 7 wins over the last 5 years say, I'm going to take a quarter of my portfolio and move it into these other stocks, these other indexes and these other areas and subsectors are so small, it's just going to move it huge. We're going to see like gold miners performance in all sorts of different other areas.
Yeah, I think what Hartnett from Bank of America, he said something really cool, which I absolutely agree with. He said, at some point, every commodities chart is going to look like the gold chart.
Yeah.
Because, you just need forget about getting some of that NVIDIA flow into the other stuff. Imagine getting some of the gold flow into the other commodities. That's another one.
It's true.
Gold is a big liquid market. So I'm with you 100%. Like, I think people really underestimate the liquidity. And again, going back to the Klaus example, they all got really cozy just being in the liquid big stocks, that they're gonna I think they're missing out already. Like I said, like it's a surprising aspect to me, because they're not even talking about the 25 performance of these assets. Like, they're not even talking about them. So coming 26, they're going to be like, again, in denial. So they'll probably buy everything in 27 and then we crash.
All right. Some great stuff. The Shrub, why don't you tell people where they can find more about your great writing and the stock picks that you have for 2026?
Yeah, I'm on www.shrubstack.com.
Thank you very much. It's our great pleasure. Welcome to the show, Vincent Daniel, partner of Porter Collins at Seawolf Capital. Vincent, thanks for making time for us.
Thanks for having us. This is we feel like we've made it if we're on your podcast. So,
I don't think so. I feel like our podcast has made it if you come on it. That's what I feel like. All right. 2025, what a year it's been. What surprised you the most?
I would think the thing that surprised me the most is the fact that so much crap was thrown at the market. The one I'm thinking of, the biggest one, is the obvious Liberation Day, right? Where we threw this new concept, which it's hard for me to make it positive, which is called tariffs, right?
Yep.
And not only that, he threw it in such a way that was just going to upset the apple cart eventually of the global economic system. And markets just dusted it off, right? Just completely dusted it off and just said, yeah, fine. And it just goes to show, it sort of confirmed our suspicion that we have of markets, is that at the end of the day, and, to steal, one of Luke Groman's terms, right, is that the S&P and markets are now a matter of national security, right? And I remember when he said that, and it took me a while to really hone in, but now it's part of ingrained in sort of my thought process, which is they can't let it go down. And the minute it starts going down, not to say that there can't be 5 to 10% drawdowns, but anything more material than that, and you really slow this economy. Like if it lasts for longer than 2 months, I mean, we truly have a problem with the economy. So that has sort of been my default mechanism. But every once in a while, there are things where like, this is bad. This is really bad.
But doesn't it scare you a little bit when you start saying they can't let it slow? Because it's the government. Since when did they become all powerful and able to dictate the terms to markets?
I think they became all powerful as more and more people are now involved in markets, and everything is relying on it. Specifically, and I think we've discussed this the last time we were on the podcast, I view the entire capital market system as ridiculously overlevered, right? Too many people are using way too many derivatives, way too much leverage, and the the capital weights that are allowed for people to do all this stuff. And so anytime things get wobbly, and degree of measurement that you can look at that determine that is the VIX and the MOVE index, right? Is whenever those get elevated, that's when you really start to see the helping hands, or maybe if you're watching behind underneath the surface, the helping hands step in. And so therefore all that levered capital gets to continue to play their spread game. And that's the reason why I think it continues to happen. And to probably answer the question, what upsets that apple cart? When does that stop? Because we all know this is sort of a charade, or I'll say that differently. I think a lot of us believe this is kind of a charade.
Yeah.
It's really inflation. Once the Fed has to, I hark back to 2021 and 2022 when Powell had no choice but to really slam the brakes. And he had to say it a few times for the market to get the joke.
Right.
I think the next time we have a real event in markets, absent some 2-3 standard deviation event that we foresee that's geopolitical, it's going to be when the Fed tightens again, some form of liquidity. And we didn't get that today. We didn't get that today, by the way.
Right. That kind of reminds me back to the Bill Fleckenstein line about, they're going to keep partying until the bond market takes away the keys. And that's implicit in your argument that it's going to be inflation that really ultimately will do it in.
Yes, that's that. And I've come full circle to the David Tepper point of markets, which is that's when you really have to get nervous. And that's probably when, for guys like us, and we do a lot on the long side, but we also like to short from time to time. And for guys like us that like to short what we think are ridiculous stocks, we have to wait until the Fed draws the liquidity away from that excess. And so then you could start playing target practice with some really stupid names back and forth. But until then, we sadly have to wait.
All right. So that's what surprised you in 2025. Looking forward, 2026, what do you think the market, not you, what do you think the market will be surprised by the most?
I think the market's going to be a little surprised by how resilient the economy is probably going to be in the first half of 26.
Okay.
And so some of the people that I speak to, and obviously the issues that people are talking, the K-shaped economy, it's real. Slowdown of economic growth, it's real. However, the economy has been somewhat resilient. I think a lot of it is a function of fiscal deficit spending. As we all know, if we go back and retake a look at that one big beautiful law, right?
Yeah.
And do whatever your AI search you want to on that, and then you realize that a lot of the goodies start coming into play in the first quarter, in turn of the calendar. And it's a very front loaded, like many of these laws, right?
Right.
It's very front loaded with tax to the consumers that are retroactive to 2025, full expenditures of CapEx. We could debate AI, but for at least for the next year, the actual deployment or physical layout of AI will continue.
Right.
Rates are right now tame. For right now, energy is more than tame. Oil prices are tame. And assuming I don't go crazy about how the hell are we going to pay for all this, right? I actually think that it's going to set up because there's an agenda, which is to win the midterm elections.
Right.
And so as a result, I think economic growth is going to be a little bit better than people think, or maybe better than people think. I actually think Trump's going to pivot to a more domestic agenda. He's starting to say that in his rhetoric. And so from there, we have become a little bit more bullish cyclicals.
Okay.
And as a result, combined with the fact that, energy is 2.8% of the S&P 500 right
Tiny.
now? We could be wrong. It'll go down maybe 10, 15%. But heaven forbid we're right on economic growth. Heaven forbid oil gets to go to 65 or 70.
Yeah.
Or natural gas stays where it is. I just think there's some material upside in these cyclical names and no one's really there. And particularly in the way we're focused on it is, okay, we might be wrong, right? Clearly, we might be wrong. So let's focus on some of the energy related names that are directly impacted to AI, but are not being rewarded as if they are.
Oh, really? Like there's still names like that?
Well, almost every direct power source, right? So
Okay.
I'll give you a great example. Today's a great example. GE Vernova, which is a direct AI play, is up 120% for the year. It was up 15% today, and it's up 25% for the last month.
Okay.
Yet, Expand Energies is trading at 6 times EV to EBITDA, right? Okay. Spot uranium prices have not moved one iota this year, right? Everything around it has moved, but that has not moved. And a lot of the other energy names just sit there, and no one wants to own them. We know that. Like no one. You never walk into a generalist PM's office and the last thing they want to do is own energy, or even if they need to own energy because it's 2.8%. But if it goes to 4%, all of a sudden they might have to own it. So that, to us, the first half of 26, I think the surprise might be this might be a little bit better than you think. And you might have to look at some of these cyclicals more than you would like.
Love it. That's a great idea. Okay. For those who want to learn more about great ideas like that, tell us a bit about your Substack, your podcast, the whole 9 yards.
So we started this about 2-3 months ago, mainly because Porter and I and Danny said, well, we're doing this every day. Why don't we just create our own little communication group and our own little community? So it's called What Are We Doing on the Trading Desk? It has 3 features to it. I try to write like weekly or whenever I have something to say, but I kind of enjoy doing that. We do a weekly podcast called the Friday Night Dirty.
Yeah.
And in addition, I love what we love. Well, that spawned from that. Of course, almost all of our creative stuff comes from Danny Moses. That he would, and he probably runs more bearish than even the most of the people that you know, right? And he would always assume that on Friday, after the close, the Friday Night Dirty 8Ks would come out because that's when everyone was going home. And then lastly, we have a community chat room on Substack and really on Discord, which is lively. And the only thing I would say is that Porter and I are engaged all day long in it because we were doing this as sort of part of our process and speaking to various friends that you know and the like. And we said, well, why don't we do this on our own and bring the community to us? And so far, so good. It's a lot of fun.
That's awesome. Well, thank you very much. I appreciate you sharing some time with us, and we look forward to another great year.
Awesome. Thank you, and happy holidays.
All right. It's our great pleasure to welcome to the show Paulo Macro, author of the Paulo Macro Substack. Paulo, thanks for coming on.
Hey, Kev, good to be back with you, man.
This is going to be fun. And by the way, I'm sitting here listening to your voice, and I still remember the first time that we got to know each other. You left me that voicemail on the WhatsApp, and I was like, oh my goodness, this guy, we got to get him on the show. What were it, like 2 years I was waiting for you to get on the show?
Yeah, and I always promised you would be my first, and it was worth the wait.
I always liked that you were very loyal. Okay, so now this has been a crazy markets 2025. What surprised you the most over the past year?
Well, Kev, without tipping my Cloud Bear avatar too hard, and of course you're catching me on a day where hyperscalers just can't seem to come out with good news. I was none of us should be ever surprised about anything, right? Like we've seen it all. We've been around the markets a few decades. But what surprised me most about 2025 was the extremity across so many different outcomes and the confluence of these extremes. And keeping it really short, if you had told me 2 years ago, 3 years ago, as we were coming out of the hole of 2022 and the regional bank issue and office falling down the stairs, that we would go full-blown 1970 to 72 Nifty 50. Oh, wait, 50's too much. Let's make it 7, right? Let's take those 7 to 40% of market cap in the US. I'd say, okay, but that's not enough. Let's go full-blown 2000 retail mania, which we thought was done in 21 after all the stimulus checks and people, unable to go see sports, so they'll gamble on Robinhood. Let's go max 11 right there. and do tech large cap growth 2000 with a sprinkle of retail on top. Okay. And then we get to like August, September, and you and I are talking on the side and realize, oh no, that wasn't enough. We've got to go full blown 2005, 2006, 7. Let's securitize the hell out of data center debt, take that stuff to 11, do a few $100 billion of that in the span of like 6 to 8 weeks, and then try to shove as much of that as possible into like BlackRock Total Return Stable Fund, so that moms and dads don't even know what the hell they're doing with like line item number 90 in the fund being CMBS of 2 data centers in Virginia. Let's take that to 11. I mean, it's like a turducken of market risks of like 72, 2000, and 07 all wrapped into 1 year. And here we are, and it's like, oh, stocks are up. Like, it's cool. Like, yeah, like my buddy Shrub says, like, gag, they'll just machinate more stimulus, and let's get the Fed to cut into the teeth of all that. Yeah,
Gosh.
I'm surprised, buddy. Like, I just can't believe we're doing this.
Listen, that line, a turducken of market risk, is got to be the greatest line. That is hilarious. And it's so, bang on, spot on, correct of what we're experiencing right now. Because it's not just one thing. It is across the board, a million different parts. Was there anything in terms of, that's the stock market. How about other asset classes? Anything else surprise you?
I thought that we were going to have a good old fashioned backside of the mountain credit cycle a lot sooner and a lot earlier than now. I guess I shouldn't be surprised, but like an evergreen loan, a rolling loan, gathers no loss, right? Yeah. The Chinese did that well for years. And I'm impressed that, that there's been so much leverage built up and the optics are like, oh, the consumer's in better shape because of the GFC. Okay, great. But the leverage is building up out of sight through pure regulatory arbitrage. As we know, bank lending hasn't really gotten in on the action until very recently, in the last kind of 6 to 12 months. And it's mostly lending to non-depository financial institutions, note on note financings, the ability of private credit to fund, a decade plus of private equity excess. And now the banks are starting to kind of be able to kick out their problems by a year or 2 or 3, stemming from post-COVID defaults, commercial real estate, office, what have you, is impressive. But I think that 2026-7 will be the story of the backside of a credit cycle that a lot of people will look back in retrospect and say, yeah, see, like we've been talking about, private credit for years, and, like nobody even really knows the size of the number. Is it 2 trillion? Is it 4 trillion? But people forget that the lack of transparency around that, combined with the incredible growth over the last just couple of years since COVID, in conjunction with the exposure therein to the real economy, as opposed to Mag 7 and what we see in trade every day that leads us to think the economy's fine. The real economy, as buddies like ours of like Cuppy have repeatedly flagged, is struggling, and anything exposed to kind of the bottom 80% or what have you are the ones who service those debts. And these kind of leveraged loan, floaters to junk companies and, SMEs and middle market and, companies that we've never heard of that are owned by private equity. It's going to be interesting to watch what a proper credit cycle looks like after so much excess has been built up out of sight in that area.
So you kind of ran ahead on me there, but let's talk about 2026.
Oh, that's not my surprise though. That's not like what I think.
Oh, that's not you still. Oh, that's no. Okay.
That's great. Just to set the table of like where the problems are kind of becoming most acute right here. But right. Yeah.
Okay. So let's, you've set the table. Let's sit down for dinner. What surprises markets the most in 2026?
I know people talk about risk the way I just did, extremity of conditions, whether it's valuation, whether it's top heavy charts, what have you. But I don't think people, between their year ahead price targets, which are always just fun to watch because they're, just another element of crowding by the sell side and kind of mostly a waste of time. But I don't know if anybody actually has like a 40% peak to trough drawdown in US equities on their bingo card at some point in the year.
And so you think that it will happen? Like you're not. So I'm with you on the Mag 7. So I completely buy that. I think we're going to get a 1/3 to a half haircut in those, 7 to 10 stocks. But you think that it drags down the entire market and that there's no chance of, or littler chance that there's going to be a rotation that keeps the indexes from really, shitting the bed and, only being a 10% down or 15% down.
Oh, that's like the $1 million question. I'm open.
It is. It is the $1 million question. I think that is the toughest question because it's difficult. And I think we can all agree the Mag 7 are due for it. They're priced for perfection. It won't take much for that to occur. What does everything else do though? Is that's the bigger question to me.
I think it's kind of hard. So an old buddy of mine used to say, even pretty girls get hurt in the bus crash. For the S&P 493, there will always be opportunities. I'm not looking at a year where all 500 names are down a lot. But when I look at where the best opportunities are on the long side, materials, for example, is now down below 1% of the S&P 500. Like, how much of that can you really, like elephants squeezing through a keyhole, how much can you really take out of NVIDIA and put to work in the $200 billion of, metals and mining and materials market cap in the S&P? There's asymmetry in corners of the market, depending on how the year plays out. But at some point, I do think that we end up with a rupture where the risk off might be less acute in space. That's, kind of, if it falls on your foot, it hurts sort of sectors.
Yeah.
And that are more Trump adjacent to where the fire hose of the fiscal is pointed. But the market is just so top heavy that I'm more bearish than you are on, a 30 to 50% correction. I think in the draw, a lot of these names, it'll in the same way that people were surprised that we could see trillions of market cap created out of nowhere. I think they'll also be surprised how quickly trillions of dollars of market cap can disappear. And purely based on the weighting issue, even if the rest of the market is only down 10 or 20% in the drawdown.
Yeah.
The .com flush as well is a good analogy because there were periods where the Russell did well in 2001 and 2002, but eventually it gave up the ghost anyway.
Right.
So I would just be very careful. Liberation Day is kind of a microcosm of what it could be, right? Where it didn't really matter if you were in metals and mining or energy or what have you. It all got tossed in a couple of weeks. And, you couldn't stand there and say, I only lost 25% and the market's down 40. You know what I mean? Like,
completely agree. And one of the things that worries me, and we've discussed this a lot off air, you and I, the dispersion trade. And to me, if that ends up being larger and somehow starts to force, if correlations start to increase enough that it forces them to go reach for VIX, it could get ugly really quick.
Yeah. Oh, I got another little bit of stuffing to shove into the turducken that I forgot to mention. Like we look at, I saw this data from Goldman a few days ago that less than 10% of options traded have variant, are more than 1 month out.
Yeah.
Just in terms of volume, we all know that over half of options every day are 0 DTE or within 1 day of expiry, right?
Right.
Shades of think about the instability that is, like an inherently levered product with such a short amount of time ticking on the clock, with retail use in the mix. Like there's shades of portfolio insurance or May 6, 2010 in there as well. Just because the market doesn't realize an insane, open to close anymore over the last few years, I think it's lulled people to ignore the kind of initial conditions around what 0 DTE really means. And people are kind of dancing on a plastic wedding floor. And when that floor kind of gives way in the same way that it did during Flash Crash or during, 1987, again, like we're lulled into a complacency that because it hasn't happened in so long, it couldn't possibly happen. And we're ignoring the elephant in the room that is the presence of this zero DTE nonsense. And it's like kindling, right? Where all it takes is a spark. And then suddenly, of course, it's going to look obvious in retrospect. Oh, like we all called it. Like, yeah, you know? So like there's an element of that as well. Again, like I don't know how else to describe it other than the turducken of market risks.
Yeah.
Like topological risk, market mechanics, valuation, you know, concentration risks. Like just you start running out of words, right? So
well, one
yeah.
thing you never run out of words, and turducken of market risk is a perfect example of the great stuff that we find in your Substack. Why don't you tell people that want to know more about your theory, your calls, where they can reach out to you?
Well, assuming I haven't switched, turned everybody off with, crapping all over, the markets, like just as we're 2 weeks away from Christmas. Like, come on, we all want the GI Joe with the Kung Fu grip. Let's just go with it, man. Get paid. Why be a wet blanket? But yeah, if people are still curious to read anything that I've written, they can go to palomacro.substack.com. And I occasionally tweet a little bit as well under the handle Paolo Macro.
Great. Thanks a lot for being here today, Paolo.
Yeah, my pleasure.
Okay, Rupert. Kevin has been working really hard on the podcast this year, and I think he's fully digressed from anything financial or educational.
Absolutely. He's just graduated from hedge fund manager to entertainer. We should all aspire to that.
Not funny. We know Santa spent a lot of hours getting the toys and gifts organized for the kids over the past few months. During this time, you've been spending a lot of time with Mrs. Claus. What's your strategy when Santa finally comes to visit your house?
I only know one thing for certain. I won't have my straddle position on when it happens.
It's been a difficult year for stock pickers. In fact, less than half of the active managers have even managed to come close to the S&P 500 return. Do you hold hope that active managers will do better next year? Do you know any portfolio managers that are bucking the trend?
I don't know. All my friends are underperforming the Reddit guys. I mean, I'm always reminded that I'm underperforming my mom most years, and she just owns Apple. She has no idea what I do for a living.
The market huddle has struggled, and Kevin's analysis seems half-hearted, and he almost seems to be dialing it in. Do you have any views on recent episodes?
It's an abomination.
Okay, Shrub. I've been researching different ways of getting new subscribers to the Market Huddle podcast, and we're trying to find our brand. How would you describe us?
Macro monkeys.
Talking Charts segment is a fan favorite, apparently. We're thinking about making this segment twice as long. Do you think that's a good idea?
Oh God, I don't even know what that is, dude.
And what do you think of Patrick's charts?
I think they're useless.
Do you not think Patrick's a good trader?
Oh, absolutely. Look, this guy would be a market wizard. He should be named the next Treasury Secretary, and actually, no, put in charge of the SEC.
Okay, Paolo. Over the years, you've watched a lot of Market Huddle on YouTube. How much joy did it bring to you?
None, but I did enjoy watching some commercials.
If you had to describe a Market Huddle episode, what would you say?
Long, slow bleed.
Can you try again?
I refuse to answer.
Okay, so let's pretend I'm Patrick. What do you think about my charts?
That's the Mona Lisa, and it looks bad too. Your drawing is not good. You should go back to art class.
Surely you must have some charts you liked in the segment. Can you pick one of your favorites?
They've all blurred together. It's a disaster.
Okay, back to me now. I don't know about you, but sometimes I think Patrick's charts actually do make sense.
That's the contrarian angle on it, at least. So there you go.
Right. Okay. Vincent, can you relate to some of the trading ideas that Kevin has shared over the year on the Market Huddle?
No, they're at the low decile.
Over the last year, whenever Kevin and Patrick agree on something, it's inevitably wrong. Do you think that this is a new development?
No, but I think it's been happening for God knows how long. Just it's not as it's more out in the open now than it ever has been.
Chase, there is a lot of talk that the Market Huddle offers the most alpha out there in podcast land. Any comment?
That could not be further from the truth. They're worthless.
Okay, Marvin, what do you think of Kevin's trading acumen?
He's a perfect reverse indicator.
Okay, Patrick recently shared a chart of the Fibonacci retracements on the Huddle. Some people were skeptical of the charts. What do you think about those comments?
I don't even know what to say to that. That's just beautiful.
The Market Huddle had a meetup in 2023 with Cuppy and some of the subscribers. Back then, Kevin and Cuppy were actually bullish. You were there. Can you share your experience?
It was as bad and as crazy as you can possibly imagine. The stories do not exaggerate.
Okay, Eric, so Kevin and Patrick have claimed that they are the nicest guys in finance. Yeah, I've been working with Patrick for a couple of years now, and I can tell you, he's not a good boss. To be honest, Kevin's a bit of a dick.
No one's going to comment on that.
I mean, at least some of their forecasts are pretty good. I mean, did you see Kevin's US dollar trade or?
No, haven't his calls been terrible?
Yeah, well, some people like the market calls. I mean, some people even called him a market wizard.
No, he's definitely not a market wizard. Market wizard of entertainment and how to make a career out of this out of sheer nonsense. But not a market wizard, no.
Okay, Vincent, we're dying to know, do you catch every Market Huddle episode?
So I try, I view it as smoking and drinking. I do it, but I experience immediate shame after it.
I do think, though, that they're probably going to consider continuing the show for at least another couple of years.
I don't think societies can handle this.
What do you think about Patrick's crayons?
I mean, I got young kids, so they could have done this drawing. So I just feel warm inside.
Dario, you've been on the Market Huddle many times, but I have heard that the last time Kevin had to coach you to be on the show. Do you even like the Market Huddle?
Bollocks.
Dario, I heard you say that in Canada, you're even more popular than Kevin and Patrick. Why do you feel this way?
Famous in Canada.
Okay, so Patrick loves to show a chart of the US dollar as the most important chart in the world. Do you have a view on his obsession?
It's a bullshit chart that is used for everything.
I'm not sure I agree, but I do know that there's something else that you're famous for. What is that?
The gold BMW. The only thing, this is the problem, you see, Perkins rules, all this stuff I've tried to become famous for, and that's the thing that I'm famous for. Gold BMW from 20 years.
Okay, Jacob. Kevin has this theory that MMT is a good way to understand how the economy actually works. What do you think about his take?
It's silly, but it's also pretty funny. We gotta have some things to laugh at, right?
Okay. Next question. So, some folks seem to actually like the Market Huddle and even claim it's their favorite show. What do you say to them?
I can't believe that we're having conversations about this.
As you know, Patrick is pretty proud of his charts, and to be honest, he's even gone to the extent where he wants to frame them on his wall. Crazy, right? Do you think that that's a good idea?
No, it's not. I mean, no. Yeah, I mean, it would look great above a toilet somewhere. I'm sure there's a bathroom in which it would be really nice.
Okay, Tony. When you get a macro tourist email, do you rush to go and read it?
They're garbage and impossible. I throw most of them away. I don't even like mine.
Sometimes Kevin seems a little bit touchy when Patrick ever mentions about the podcast that he cheats on him with. But the big question is, what do you think of the other podcast host?
King. Absolute freaking king.
Okay, so what do you think of Kevin?
Not a fan. I'm not a fan.
If you had to sum up the Market Huddle experience, how would you characterize it?
Comedy hour.
All right, time for the after show. We have to go and we have to rate our beers and our wine. I'll start again. Although it's from Winnipeg and it is from my best buddy, it's a pretty crap beer. And I'm sure he's not going to listen to the whole show, so he's not going to be offended by this at all. It's a Trans Canada Brewing. They did a good job. It's very Canadian. I don't know. I'm going to give it a 6, an amateur score.
Just there you go. I have nothing good to say about this wine other than it gets me drunk. It's a cheap wine that's been nicely made into hot wine, and it's gonna get me a buzzed. How about you? How's your wine, Danny?
Do you know what? I really like this wine. Again, I'm going to show it again because I actually think it's worth anybody who can get a hold of it to get some. I think it's one of the best wines I've drank, and it's good for the planet. So, you know,
it's good for the planet.
And if you're going to give it a plug, you got to at least say the name again.
The onion. It's like the what Portuguese word in onion.
The onion.
The onion. It's onion. Yeah, there we go.
Is that
Anyway,
actually what it's called?
Yeah, it's called onion in Portuguese.
Well, they gotta work on their market.
That's the easiest way to remember it, to be honest. If everyone can just Google translate that in there.
Exactly.
All right, so
I can't believe it's the end of the year.
Yeah.
Like this is it. Like the next huddle's gonna be a 2026 story.
Yeah, and before we get on to that, though, let's talk about Nazaire, or how do you say it?
Nazare. Oh yeah.
Did
well, you know what? It was way hyped. So they basically said the biggest swell in a decade. So everyone's went there thinking they're going to get the 100-footers, and see the record stuff. So it was worse than going to Disneyland. Like they were completely not ready for this amount of people to show up, and there's like shoulder to shoulder on this thing. Can't find a bathroom. It was crazy, but. Some cool waves, but they were much more in like the 30-40 foot, which is still big and very entertaining. Those surfers were still like crushing some great waves, but they were nowhere near that's the largest wave in the world was like 110 footer that a guy surfed there. Like, so it was nowhere near the record waves.
Yeah,
but still really entertaining.
So those go and they build like all the way across the Atlantic.
Like what?
No.
Like they don't.
So Nazare is unique because it has a canyon underneath.
Yes.
And so what happens is the swell doubles on itself. So it comes in from the Atlantic, and then the canyon basically.
There's only one little spot that this wave can come in because when the tide is right and the
okay, so it's a tide
perfect.
thing.
The swell, like it just perfectly lifts the water into a thing that in this one little area has these crazy ass waves.
It's like God said, I will make a great place to surf, and created that.
Absolutely.
Yes. So Dan, you didn't go, buddy?
No, he was a millennial.
No, unfortunately, I watched it on YouTube. You know, I didn't have to deal with the crowds, any social anxiety, like all millennials have this problem. So I just stayed at home and I just watched it live.
Oh God, that's hilarious. All right, we got to just say a big thank you to all of our wonderful listeners and guests throughout the year. It's a real privilege to be doing this show, and I always say that I would interview these, the wonderful guests that we have, even if nobody was listening. But it's definitely better with all the great guests, and we really do appreciate everyone's support throughout the year. It really means a lot to us, and Patrick and I and Danny are appreciative of each and every one of you.
You know what it is, and what I love doing the show with not only you guys but bringing these guests on is that we've created like a Market Huddle community, and even our listeners, our loyal ones, feel that way. And it's an opportunity where we get together, once every couple of weeks and just talk real about the markets and try to understand things. And it's just such a privilege to be a part of this show, and I thank all the listeners and all our guests for being a part of it. It's been awesome so far, and I'm looking forward to many years to come. But
and I just like to say, people always mistake the relationship I have with Patrick and assume that we've been good friends for like decades. People are like, "Oh no, you must have known him years and years ago."
Yeah.
No, I've been just lucky enough to know Patrick for what has it been, like 8 years? Something like that. 2017 we met. And it's been just a wonderful, wonderful, I couldn't ask for a better podcast partner, and I do appreciate it. And in terms of Danny, he's been an absolutely terrific addition to the show. I absolutely love it.
Where's all the props? Like, look at them. Like,
well, and the only thing that I kind of get upset about is he's such a handsome guy with the perfect light.
Makes us look like a bunch of old parts.
Yeah. Anyways, Danny, you've been a great addition. So, why don't we just kind of say goodbye to everyone and let everyone go have a wonderful
Happy New Year, everyone.
Yeah.
Merry Christmas, or like it's happy holidays. It's been a great run, and looking forward to seeing you all on the other side.
Yeah, happy happy holidays. All the best to you and your families in 2026.